I don't see this as a March 2000 type of event. I think there are a lot of differences here. Are we in a bubble? We might be. Good luck calling the top of it.
You have to assume that all bubbles eventually come to an end. So what would cause this party to end?
What would cause this party to end is...
How do we stay ahead in the AI space when everyone thinks this is a giant bubble, the likes of which has never before been seen? How do we pick AI companies when it's become a lot more than just LLMs and chips? So what are the advantages to the AI space and the tech sector overall in 2026 versus other sectors? And where is the entire sector headed? These are the questions we'll be discussing with Matthew Tuttle, founder and CIO of Tuttle Capital Management. He's also going to be revealing to us not just the direction of the tech space, but his favorite tech and AI plays and stocks right now. Stay tuned. This is going to be a very interesting episode. This video is brought to you by and sponsored by Kalshi. It's the largest prediction market in the United States. Unlike a sportsbook, you're trading peer-to-peer on real-world events, from economic data to political outcomes, and the price moves on public opinion, not a house. Go to the link in the description down below or scan the QR code here to get started. And new users who use my code LIN, L-I-N, can get $10 when you trade $10. Right now on the Kalshi, there's a trade called Which Companies Will Officially Announce an IPO this year. This trade perfectly predicted the SpaceX IPO before it IPO'd, so I think investors better pay attention. At the top of this list is Jersey Mike's at 93% chance, Anthropic at 85% chance, and OpenAI at 68% chance. And we're going to be talking about this issue with Matthew. He's going to reveal to us his top IPO pick. And spoiler alert, it's neither of those companies that I just named. But if you do put $50 down on Matthew's favorite potential IPO of this year, you may potentially yield $592 if you're right. So stay tuned. Matthew's going to reveal to us what that stock is and what we can learn from the SpaceX IPO. Matthew, welcome back to the show. Good to see you again.
Hey, thank you very much. And thank you very much for having me.
Yeah, memory just became the hottest trade in the market. DRAM contract prices have jumped about 60%, I believe, in a single quarter. And we're going to talk about your new ETF. But first, let me just pull up a chart and talk about the broad market. People have been talking about the SpaceX sell-off after the IPO. And I just want to point out that it's not just SpaceX, it's the tech sector selling off. So on my screen, you see SpaceX in the bar chart here. IGV, which is the software index, is the blue line, and Bitcoin is the green line. It's just important to know that all these things have been moving together. And while SpaceX has had a great run in the first 2 days of IPO, the stock has been sliding ever since it reached the top of around $220. The IGV index has fallen alongside SpaceX. So people have been talking to me about how Bitcoin has been a leading indicator for the stock market. Bitcoin's down 50% from its top, and the technicals don't look good for Bitcoin. So what do you think? Do you think that Bitcoin and the IGV index trading alongside each other are indicative of more downturns or more corrections to come?
So I don't know that I'd read a ton into them going down together. I don't think Bitcoin's a leading indicator for the market at this point, as much as I think just the air has come out of that trade, where, before we had memory, photonics, space, all of kind of those bottleneck trades, we had Bitcoin. And, now all the bottleneck trades are just more interesting. You've seen the air come out of Bitcoin. I'd be a dip buyer here on that somewhere. Software is a whole different beast. Everyone knows there are a lot of software companies that are just going to get crushed by AI. And then there are going to be some that benefit. I'd stay away from IGV. That's not a smart index that's going to include everything. I'd be careful on software. I think you can trade some of the names like, a Now or a CRM. I think the cybersecurity names, we're going to need more of them, not less. But I think there are better opportunities elsewhere. And, what you've seen the past couple of days is what what happens when things go up too far too
Yeah.
fast.
I'm just
Eventually people are taking profits, and that's what we're seeing right now. I mean, it could turn into something more, but right now it's just people taking profits, which part of a normal market.
You said, okay, so I brought up IGV because it's commonly quoted as a proxy for the software index, but you said it's not composed of what you call smart stocks. Is that what you said? So top
Well,
holdings:
so
Palantir, Microsoft, Oracle, Salesforce, Palo Alto, Intuit, and then a few others.
right. I mean, what it's going to have is it's going to have everything. And before AI, yeah, you could make an argument you want everything. Now, in the age of AI, I'm going
Mhm.
to want to strip out, and I don't own any software stocks. We rode CrowdStrike up. We ended up, I mean, it went up a ridiculous amount. We took our profits. I trade now, and I trade CRM every once in a while. And I trade Trade Desk every once in a while. I don't think I've ever made money trading Trade Desk. But I think now in this era of AI, you've got to split out, if you want to be in software, what are the software companies that are going to be additive or at least aren't going to get crushed by AI? And what are the software companies that are? And, either you need a new ETF, which we may build, or someone else may build it, or, you just got to pick the individual names and don't buy the ETF.
So, what companies do you think will not be cannibalized by AI? Software companies, at least. The
Yeah, I mean, I
question
think
comes from the concern that AI will make a lot of legacy software companies obsolete.
Yeah, I mean, I think a Microsoft is always, I mean, that's a whole different category of company. They're going to be fine. A Palantir is going to be fine. Anything cybersecurity, I mean, you need more cybersecurity, not less, is going to be fine. And I think, a Now and a CRM are going to be fine, which is why we do trade those from time to time when they get beaten down. Um, beyond that, I'd be really careful with software.
So, why should people be looking into the memory space in particular? If AI is going to continuously innovate and require less and less compute power, at least that's part of the coding thesis, then shouldn't, in theory, we should be shorting memory stocks, not going long on them?
So right now, memory is a bottleneck. Is it always going to be a bottleneck? Who knows? Do you want to be buying, memory stocks up here that have already gone up a gazillion percent? You could make an argument that they've run, let them come in a bit. But until memory ceases to be a bottleneck, that's an area I'm going to want to be in, which is why we've got 3 different ways to play it with memory ETFs, and 4 if you count our 2x long SanDisk. So I do think memory is an area you want to be in. As we're sitting here taping this, Micron is up over 8%. I'm assuming, I haven't looked, I'm assuming that means that they announced something killer. And, so the memory names is something I want to be in. What we tell people is watch your position sizing. So, I've got, all of my ETFs in my portfolio, and we have them in our wealth management portfolios, but we've got them at small sizes, 1 and 2%. So, if we do have a 50% correction in these names, it's not that big a deal.
Let's pull up a chart of Micron. I remember going back to the efficiency in AI problems. So I remember when Google came out with TurboQuant, which promises to reduce memory footprint by up to 6 or 8 times. That was late March, and immediately after the news, Micron fell. Mid-March to late March, it fell about almost 20% in that month. What happened subsequently? Matthew, why did Micron go up 100? No, yeah, about 80% from. Sorry, that was May. Why did Micron go up from $320 to $1,200? That's 275% since it bottomed out after Google came out with TurboQuant.
Yeah, because the price of memory has gone up exponentially. It is I look at three main bottlenecks: memory, photonics, which is kind of a data bottleneck, and space, which is where you're going to put data centers bottleneck. Of all of those, memory right now is the most powerful. And you could look at a chart of SanDisk, Hynix, Samsung. All the memory names are going to look exactly the same because memory prices are skyrocketing because AI needs so much of it. And again, Micron's up 9%. So and expectations coming into this earnings were massive, which means that they beat them again, and that's probably demand related on memory and them talking about prices not coming down.
So what is the AI thesis going into 2027?
So our AI thesis going into 2027 is it's still going strong. I don't see this as a March 2000 type of event. I think there are a lot of differences here where, so I think the dip we've seen over the past couple of days, you ought to be a buyer of it. And if Micron stays up here, probably have a pretty decent day in these names tomorrow. You want to look at the bottlenecks. So the trade in 2023 to maybe 2024, 2025 was anything related to AI we're going to buy. Now you want to look at the bottlenecks, memory, photonics, space, but you want to keep peeling the onion and, the next level. So we're looking at things like the substrates. We're looking at inference. We're looking at, the cost of tokens and, where, what companies are in those types of areas. What's going to be the next bottleneck, the next bottleneck, the next bottleneck. But we really love, all of the infrastructure, the energy, and then we like balancing it out with the halo names, heavy asset, low obsolescence. You're looking at what are traditional value companies that are additive to AI, that AI isn't going to put out of business.
Yeah.
So the oil companies, the utilities, copper, things of that nature.
This is an article you wrote, which is important. People have pointed out that Broadcom sold off dramatically in the first week of June. June 4th, 2026, Broadcom did not break the AI trade. It exposed the entry problem. So this is what happened. Stock went down double digits in a single trading session, even though the report wasn't terribly disappointing. And you wrote this here. On that day, Broadcom sold off more than 14% after a print that was not catastrophic. Revenue was not collapsing. AI demand was not disappointing. The stock fell because expectations have moved beyond strong and into perfect. Analysts described it as precisely very high expectations, meeting a market that wanted immaculate execution. The business was fine. The multiple was not. People have cited this as an example of, look, the AI trade is breaking because now we're getting examples of Broadcom where nothing was wrong with the earnings, and yet the stock fell still 14%. So that signals the end of the froth, they said. What was your response to this particular news?
Yeah, and that signals an end to some of the froth. The problem I've got with the Broadcom, and we don't own it, and there's nothing wrong with it. It's just it's not a bottleneck trade. It's a massive company that you could easily make an argument is trading at somewhat of an inflated multiple. I'm not going to argue with anyone who wants to own it. I just think there are better opportunities in those more bottleneck areas.
Okay, what about opportunities with future IPOs? What have we learned, by the way, from the SpaceX IPO? A lot of media attention was given to the SpaceX IPO. And the overwhelming consensus on the media was that it was overvalued. People should stay away. Immediately after, it went up double digits. Elon personally made, I think, $200 billion in 2 days. But anyway, SpaceX was not a terrible trade for the people who got in right away, assuming you sold a few days later. So what can we use? What can we learn from that example going forward? Because there's quite a few other IPOs this year that people are looking forward to.
Yeah, and really it's what we would learn or what you should have known. You don't in SpaceX was unique. I've been investing since 1981. I've never seen anything like this. But the rules still apply. You don't want to be exit liquidity for people who are getting in, at the IPO, the Fidelities and, the big investors who are able to get in at that 135 price or whatever it is that it went public at. I think it was 135. Who are able to get in at that price. At some point, they're sitting there in a massive gain. They're going to sell. You don't want to be exit liquidity for those guys. So we added, we have a 2X on SpaceX, SPAX. We added it to our SPCI ETF. We added it to our UFOD ETF. We added it to our HALX ETF. We didn't add it day one. I told people over and over, you probably want to stay away day one. I think SpaceX is a must-own stock. But again, with all of these IPOs, and we've got OpenAI coming, we've got Anthropic coming. Eventually, we're going to have Anduril, which I'm really excited about.
Yeah.
I'm hoping eventually we're going to get Figure AI, which I'm also really excited about. I think the rules apply. You want to own those companies, but you don't want to be exit liquidity for all the people getting in at the IPO price.
Yeah, so this is from Kaushi.
You want to stay away from day one.
Which companies will officially announce IPO this year? Anduril, Anthropic, OpenAI. Which of these would you buy as a long-term hold, by the way?
I'd buy all of them, but my favorite is probably Anduril.
Anduril. That's the okay. There's traders are predicting a 6% chance on Kaushi. They're going to announce an IPO this year. But why Anduril over some of the other hotter, more talked about AI names?
So I love where Anduril sits, and it's perfect for my UFOD ETF. So what we're seeing in the defense space is what I call the convergence trade, where traditional defense used to be big ships, big tanks, fast planes. Now it's drones, drone killers, lasers, robots, AI. You're seeing this massive convergence between traditional defense and all of these areas of AI. And Anduril my favorite company there. And I can't buy them. So in my UFOD ETF, I own Lockheed, I own Northrop, I own Kratos, I own AVAV. I would love to own Anduril. Anduril's the name.
Speaking of bottlenecks, if the Strait of Hormuz remains closed, which it reclosed just earlier this week rather. So if it remains closed, are you concerned about critical materials and raw materials needed for the semiconductor manufacturing to be cut off? Helium, for example, being one of them, coming from the GCC regions as well as others?
Not yet, but certainly something we're keeping an eye on. Whenever I hear the war is over, I don't believe it. We always tell people, hey, when they tweet the war is over and oil stocks go down 5%, buy them. I'm not as worried about the helium and things like that. I wrote an article about that in my newsletter a couple months back. And what I came out with was that's not an issue right now. And obviously, it's something the market's not worried about at all. But something we're going to definitely keep our eye on.
So people talk about this being a huge bubble. And I don't know if you think it is, but if you are to assume that the stock market, especially in the tech sector, is a huge bubble with valuations unlike anything we've seen, I'm talking about SpaceX as an example, then you have to assume that all bubbles eventually come to an end. So what would cause this party to end?
What would cause this party to end is really the hyperscalers coming out and saying, all right, we're done. Enough is enough. Spending is crazy. We're cutting back. And, I think that could be a big problem. Yeah, I don't see that happening anytime soon. Are we in a bubble? We might be. Good luck calling the top of it. That's one thing I'd look out for. And again, I go back to what we tell people. You're not going to call the top of the bubble. Somebody is, but it's probably the guy who's out there every single day saying it's a top, and then one day he's going to be right. I'd watch your position sizing, how you structure your overall portfolio, so that if I'm wrong and we are in a bubble and this is the top, that you don't get your head handed to you by the market. And there are ways to do that, to invest in this quote unquote more safely.
Well, the market is expecting the Fed to raise rates this year, maybe once, perhaps even up to 3 times, according to the CME Fed Watch tool. How does a Fed rate hike impact a high beta sector like tech?
I think it impacts it a lot. And I don't know if you remember, but we did the inverse ARK ETF, and we launched it November of 2021 because we thought the Fed was going to raise rates and that was going to kill those stocks, and that's what happened. And that's what'll happen again. Stocks that don't have earnings today are going to get crushed in a rising rate environment. Certainly something else we are keeping an eye on here, which could be, also something that could pop the bubble. Is inflation transitory here or not? And I think you've got a big part of the market betting it is, betting the Strait reopens, oil goes down to 60. I don't know that I believe that, but I always keep an open mind. I want to see both sides, and I want to be prepared either way.
Okay, let's talk about ARK. It was a darling trade in 2020, hugely outperforming the index, and then it had a bubble pop, if you want to call it that. And since then, the NASDAQ index has been outperforming. What went wrong with the ARK thesis post 2021?
So, a bunch of things. Number one, people need to understand the one immutable law of markets is reversion to the mean. When you go up 100% in a very short period of time, you're borrowing future returns. You are going to retrace some, if not all of that, which is what happened here. Number two, everyone was calling Cathie Wood the next Warren Buffett. Structurally, there can never be another Warren Buffett. And I would argue Warren Buffett hasn't been Warren Buffett for the past 20 years. And, in no offense to Cathie, who already hates my guts, it's not a great stock picker. I mean, when you are innovation and you miss the AI trade, I don't know how you can say you're investing in innovation. So we've got one of my ETFs, Meme, which is kind of always my top 20 to 25
What's the ticker?
ideas. MEMY. And we just hedged it by buying ARK puts.
Yeah, all right. So the meme stock income blast ETF. Tell us about that. Meme stocks. How do you pick meme stocks there? Yeah.
So I redefine what a meme stock is. So, I think you've had a generation of the so-called smart money institutional investors look at retail investors as dumb money. I think that's flipped. There are a group of retail investors who are connected on social media and discords who I would put up against any hedge fund out there. So I don't look at meme stock as a derogatory term. I look at a meme stock as something that the smart retail guys are talking about. And, so we're going to have 20 to 25 names. We're going to hedge sometimes. So I've got a big put in ARK. I've got a big put in SMH, semiconductors. And then we're long a bunch of the bottleneck names. But we also, we also sell put credit spreads on all of our names to generate income. So we try to do like a 30% yield with unlimited upside.
When you take a look at how the AI trade has progressed since 2022 into now, first it started with an explosion of large language models and the usage of ChatGPT. and it made sense to be positioned accordingly for software that was aligned with LLMs. Now in 2026, you're talking about bottlenecks. Do you think that the evolution of AI from an investment standpoint has progressed according to what would be your expectations in the last 3 years, and according to, I guess, how tech usually has progressed and evolved in past cycles when new technology was introduced?
Yeah, and it fits in perfectly with something we teach people. We call it the thematic investment hierarchy. So you want to start with, all right, what is a theme? So let's say AI. Then you want to look at, all right, who are the obvious winners? So AI, who's the obvious winner? NVIDIA. All right, but everyone knows that now. Then you want to look at, all right, who are the suppliers to the winners? Who are the suppliers to the suppliers? Who are the suppliers to those suppliers? And you keep peeling that onion, and that's how the trade keeps going. But you want to constantly be ahead of where the crowd is. So again, memory, photonics, space. Now I would be buying space. Our space ETF, it came out March 11th. In like 2 months, it doubled. And, now it's gotten its butt kicked ever since SpaceX has come out. Now's the time I'd be buying it. We had a bunch of people on Twitter like, oh my God, it's up 100%. I'm going to buy. And I'm sitting there like, oh God, I don't know that I would do that here.
What is the space ETF? A lot of companies involved in exploration and, launching satellites are not public. So what's in it?
So what's in it are the kind of 16, I think we've got now, pure play names. So we have SpaceX, obviously, Rocket Lab, Lunar, Fly, Redwire, ASTS, Iridium, Spire, the pure play space names, not the Lockheed Martins and the Boeings and things like that, maybe they touch on space a little bit. So it's going to be volatile. And again, it doubled doubled in 2 months. And, now it's come back down a lot. Now's the time I'd be buying it.
How do you monetize the space industry? When people first looked at, a lot of people, when they first looked at SpaceX's financials, they were kind of surprised to learn that a majority of the revenues for SpaceX didn't come from rocket launches. It came from the satellite service known as Starlink.
Yeah.
And, it started off as a rocket company. Now it's mostly maintaining Starlinks in space. So what's the future of monetization in space is my question.
I love space because, first off, you're going to have data centers in space. Not going to be tomorrow, not going to be the next day.
So just on that note, why do we need data centers in space? We don't have enough room on Earth? Seems like
we don't have enough room on Earth. You don't want one in your backyard. I don't want it in my backyard.
Okay.
Where do we have unlimited real estate? We have unlimited real estate in space. What we also have access to in space 24/7, depending on where you're pointing, is solar energy, which we don't have down here. But you're going to need an entire infrastructure. You're going to need to get stuff up, get stuff back. You're going to need to defend it. But then you're going to see much more. You're going to see mining in space. One kind of fun fact that if anyone's ever watched Scarpetta on Amazon, they'll know is you can't make body parts in a gravity environment. You can make them in space. So we're going to see different types of manufacturing of things that don't work in a gravity environment that work in zero grav, also in space. So I think we're not even in the first innings of space. Now, is it going to be, the Rocket Labs and the Lunars and those guys? Who knows? But right now, those are your pure play space names.
Okay, tell us about your most recent ETF launch.
So this morning we launched RAM, RAM. It is 2x of Roundhill's DRAM ETF. So if you like and if you bought it today, Micron is now up 12%. I would assume it's going to be doing pretty well. So, if you like this memory trade, you really like this memory trade, it gives you a way to 2x it. We also have DRMP, which is, DRAM and some memory stocks with put spreads for income. And then we have our 1X version, which is HBMX. We've got kind of a more diverse group of memory names, and we don't currently have Hynix and Samsung because I'm a little bit worried about Korea at the moment.
What are you worried about?
So structurally, you've got things going on specifically in Hynix where someone launched a 2X Hynix ETF in Hong Kong, and they've scooped up all of the swap capacity on a Hynix. It can create stresses to the market. It happened to us with our 2X MicroStrategy ETF back in November of 2024. And MicroStrategy is a lot lower. It's not because of us, but still, I get a little bit worried when you see kind of these stresses, which is going to cause option volatility to go up. And, so we're waiting on Hynix and Samsung for some of that to clear out.
I mean, Korea has been the top performing stock index in the world this year, driven primarily by semiconductors and chips. Probably Hynix is to contribute to that. When you look at an index like that, what goes up must come down. You think to yourself, how long can this last? Nobody knows. Nobody knows where the top is. Good luck picking the top, like you said. But you have to ask yourself, what can keep driving it higher? Well, how would you answer that question?
So I think the potential of AI is immense, and we're in a race. We're in a race with China, Russia, Europe, everybody to come up with whatever is the end result, which hopefully is not Terminator. that would suck. But we're in a race to come up with this end result. And I think anything that stands in its way is going to ramp. Memory, photonics, all of that. Which is why I don't think we're at a top. But again, protect yourself just in case we are, because no one is going to be able to call it.
Okay, great. Thank you very much. Well, Matthew, where can we learn more about you and your work?
So our website is tuttlecap.com. We write a free daily newsletter, which you just showed an example of, where we talk about different themes, take deep dives, stocks we like, things like that. So there's a pop-up on the website. Feel free to subscribe to that. We also do a lot of different webinars and things, so you'll get notified of that when you sign up as well.
All right. Thank you very much. We'll put the links down below. Matthew, it's a pleasure speaking with you. I'll speak with you again soon. Take care for now.
Great. Thank you.
And thanks for watching. Don't forget to use my code LIN when you sign up to Kalshi. New users who use my code LIN, L-I-N, can get $10 when you sign up and trade $10 using my code. Link down below or scan the QR code here.